Top three things in my notebook this morning. The country that is India, number one. Number two, the U.S. 10-year bond yield, which we'll focus on each and every day, all day. And then finally, the Russell 2000, which continues to suck wind. Now, first on India, not sucking wind. So follow the Hedgeye playbook, follow the political change, follow the policy change. So don't forget that the Indians have raised interest rates. Dr. Raj is taking down the inflation. As the inflation falls and the currency strengthens, you're seeing the Indian stock market react positively to on-the-margin consumption growth getting better for real. Again, it's calculated on a real basis. The Indian stock market up now 17.8% for the year to date. Fantastic asset allocation to continue to make on pullbacks India would be. Now, on the 10-year bond yield, that is signaling the nasty. You did get a bounce in yields yesterday. Who cares? You still continue to make A, a lower high, and B, you remain significantly below the Hedgeye tail risk line of 261, and then you have the trend line above that at 280 on the 10-year bond yield. So again, bonds remain where you want to be. It's the best position you could have had from a year-to-date perspective in the USA, again, unless you own utilities, which is pretty much like a bond anyway. Slow growth, that's how you play it. Easily looking to 242, 2.42% downside in the 10-year bond yield from here. Russell 2000, have you heard me again yet? Have you heard me again? As my man Walter White said, I am not in danger, Skyler. I am the danger. I mean, that is the point. The Russell 2000, the growth, if you look at the 10-year bond yield, the Russell 2000 was down 50 basis points on Friday with the S&P pinned up at the highs. It was down another 70 basis points yesterday with the S&P pinned up at the highs. The entire a large percentage of the underperforming component of the hedge fund community continues to be short the SPY. So don't do that. Short the danger. Be short U.S. growth. Russell 2000 down 3.1% for the year to date. Time stamped. Those are your top three things.